And welcome back, everyone, to Between Bells on Cheddar News. I'm Baker Machado in New York, and Allbirds, officially a public company, as the sustainable footwear brand began trading today at the Nasdaq under the ticker symbol BIRD. You see a live look of where their shares are at. They were priced originally at $15, but their IPO skyrocketed, and the company up 60% so far. So joining us now to discuss the big day for the company is Allbirds CFO Mike Bufano. Mike, congratulations on the very exciting day. Also, you guys rang the opening bell at the Nasdaq as well. Now, so far, you guys have raised about $303 million from the IPO, so it now values you at about $3.3 billion. Why was going public such an important step for you guys at Allbirds?
Well, first off, thanks for having me, Baker. Thrilled to be here with you. Today is a great day for Allbirds, and a big part of the reason we wanted to go public right now is this is a company that's really a next generation business that's being built for the long term. As the world has slowly started to get more back to normal, we definitely see like a strong consumer demand. Our sales are up 30% each of the last 2 quarters, so we feel like now is a great time for the business to be entering the public markets.
Okay, so what do you credit the success in the last few quarters that you mentioned that you guys have had, and where do you sort of forecast things going now that you're officially a publicly traded company moving forward? Do you think it's sort of the expansion that you guys did into different areas here that helped you out?
Yeah, it's really a few things that have driven it. I mean, first and foremost, we have great products. I hope you're a fan. I hope you're wearing some Allbirds right now. And we've had a lot of great new product launches, and that certainly drives it. We've also opened a bunch of new stores this year, and that's definitely a big driver of it as well. And we're seeing people's behavior start to return to normal when it comes to retail, and that's really exciting for us to see.
So let's talk about that for a moment, because it's really interesting the sort of evolution that you guys have gone under, with the 27 stores that you operate right now and the more that you say that are on the way, because primarily most of the revenue for you guys was online. How much do those physical brick and mortar stores really help you guys out when you're looking for people to get the correct fit? Returns don't come back as a result. So how much of an important factor here was the brick and mortar space?
Yeah, brick and mortar does a few things first, and you hit on some of them. The first is they're actually great brand beacons. Like in our S1 and in our roadshow, we talked about the example of our Boston Back Bay store, and we saw that lift the sales in the entire Boston market, driven primarily by new customers, both in digital and physical retail combined. So we know they're great brand beacons. I mean, to give you a sense of things, we have 11% aided brand awareness in the US today. So there's a whole lot of people we're still trying to say hello to as a brand. So the physical stores are great for that. And then you definitely hit on the other thing. There's lower returns when people go to a store, and then there's no outbound shipping when people go to a store as well. So the stores are both great brand beacons, they're profitable in and of themselves, and they help the overall margin profile of the business.
How also was the fact that you guys are an ESG, an environmental, social, and corporate governance company, how much do you feel like that played a role in sort of you being an attractive company for people to purchase in this IPO here?
Yeah, I think it had to have played a role when you look at it. I mean, again, when I talk about us being a next generation company, one of the areas where we really lead and really differentiate ourselves is in the space of ESG, and we put some stuff in our S1 about our current performance, our commitments we have in the future, and a bunch of investors asked us about that on the roadshow. And I don't think it's a check the box thing for investors on ESG. I think they truly believe the companies that perform best on the ESG criteria will perform best in their business and create the most shareholder return over the long term.
Mike, what's going to be the path to profitability? What does it really look like for you guys, given the fact that you're a B Corp, which basically means you're balancing, the profit and, social purpose at the same time? Does that impact potentially your path to profitability, or does a day like today help you guys get there?
The B Corp thing really doesn't impact our path to profitability, and I'd say if you look at sustainability more broadly, the more sustainable Allbirds is, the better it is for our business. Our customers like our products more, people resonate with the brand more, and we attract great employees, we attract great partners, and some of the stuff we're doing to further reduce the carbon footprint of our products. We have a commitment to reduce the carbon footprint by 50% by 2025 and 95% by 2030. That stuff will actually improve our margins as well because it lowers some of our costs. So to us, we can be more sustainable and be a great business and be a great investment.
Do you think we're going to see this door open of more sustainable brands as a result of you guys doing successful today, that there's essentially a template out there for other companies that where sustainability is front and center in their investors' minds, that we're going to see more companies start doing this as a result?
We certainly hope so, and you're already seeing it, right? I mean, Rivian's going public next week. I think what they're doing in electric vehicles is a great example, right? I think there's tons of other companies, and we really encourage them, look at some of the stuff we did in our S1. We're happy to connect and talk about it, and how we try to really explain to investors why we believe we're best in class when it comes to ESG, and I think the world will be a better place if all companies follow our footprint.
I agree. Product expansion also really helped you guys as well. What sort of new products and potential innovations do we have maybe down the road from you guys?
They are not going to let the CFO talk about new products.
I wish.
But I will make one small pitch. We did just launch super comfy sweats, which are kind of perfect for winter, perfect for cuffing season if you're going to stay home and everything. And I wore them on the flight here to New York, and they were super comfy on a 6-hour flight. So I encourage you, hit up the app, hit up the site, order some of those. Let us know how you like them.
I love it. Smart. And by the way, everybody still loves sweatpants, especially for the holidays.
Absolutely.
With the holiday season coming around the corner, are supply chain issues going to be something that impacts you guys in the next quarter, given the fact that we've heard that from so many other retailers in their last earnings reports?
Actually, not really for us right now. We have a great supply chain team. They are really agile. We've worked with our suppliers. We saw some of this coming, so we built in longer lead times. And as we sit here today, we expect to have the overwhelming majority of our inventory in distribution centers, and in stock, both in Q4 and the holidays, then into Q1 and Q2 next year. And that puts us in a really strong position, again, on a day like today when investors are really starting to learn about Allbirds.
All right. Well, I can't wait for those sweatpants. Congratulations on the very exciting day. Allbirds CFO Mike Bufano. Thank you, Mike, for joining us here on Cheddar News.